It's Wednesday, and that means McCollum on business here on this Wednesday as well. Of course, I'm Stephen McCollum, and for the next 30 minutes or so, I'm going to get you updated on what's happening around the business world. We got the market watch, stocks we're paying attention to, local and national stories that you need to know. And today, it's all about the Fed meeting wrapping up and the decision. We'll get that decision coming up at about 11 o'clock our time here on the West Coast. We're not expecting anything from that. We'll talk about that here coming up in the stories. But the big thing kind of around the markets today, oil prices is dominating the market talk here today. So let's not delay it all. Let's get into it with that Market Watch. Fed decision, oil issue. Oil's rising again today, by the way, as it did yesterday as well. Big tech earnings coming out as well as the expectations there. Well, all that means the Dow Jones is down 280 points right now to 48,912. The S&P 500 is down 15 points to 7127. The NASDAQ not escaping it after a big day yesterday, down for them. 60 points down for them, 24,603. The Russell 2K, that small cap index, down 15 points as well, 2746. And then there's Bitcoin. Well, it stabilized yesterday. Technically, it's up today to 320 points, but it is at 76,671. A couple thousand less than that 78 that it was at for 3 or 4 days leading up into yesterday as well. As well to see, does Bitcoin sell off again and go back into that low 70s, high 60s, or this the new normal here for Bitcoin moving forward? We'll obviously keep our eyes on that as well. And as I said, our big stories today are Fed decision, oil prices. We'll talk about both of those coming up as well. But first, we got stocks to talk about. And first stock we're going to look at is Seagate Technologies, a memory stock, 16.37% up here this morning. Huge increase for them. Seagate sees their fiscal fourth quarter revenue coming in at $3.45 billion. I like the caveat here, plus or minus 100 million, by the way, folks. Their adjusted earnings of $5 per share, plus or minus 20 cents is what they say. I love those little caveats. But the estimate was $3.97 per share. So even if it's 20 cents less than $5, blew their numbers out of the water here. Then also revenue is expected to be at $3.16 billion. Well, blew that out of the water. Even if it's plus or minus 100 million or minus 100 million, the $3.45 billion number, even if it's minus 100 million, they blew away their revenue side of their numbers as well. Third quarter results beat estimates on the top and bottom lines. That's why they're up 15.60% right now for Seagate Technologies. Now, with them reporting those types of numbers, you can imagine the competition, the whole industry of the memory stocks. Well, that has raised up the whole group as well. Our next stock we're going to look at, Western Digital. Just on the backs of those Seagate numbers, they're up 9.17% right now. And then there's SanDisk, right? The other big memory company. They're up 8.22% right now as well. Both of Western Digital and SanDisk on the backs there of Seagate's Technologies reporting. And their huge stock increase here today. So memory stocks are very well today. Even with that, right, all the indexes are down with the sell-off here today, even with the growth here of the memory stock side and that specific segment here this morning early in stock trading. It's fascinating how the markets work and the intertwining and things to that effect. But now, of course, I told you, the Fed, which we'll talk about them in a minute. But the other big story is gasoline prices here as well. Look, it's not good news here with what's happening over the Middle East. You know, there's a ceasefire. Conversations are continuing. The Strait of Hormuz is technically not open yet. And officially, gas prices here in the United States hit their highest level in 4 years yesterday, all while we're waiting for the negotiations over that Iran war to finish up. But this shows little signs of a resolution, and that's where the fear is coming from on the oil prices. So the price of an average gallon of gas as of yesterday, $4.17. That's an increase of $1.19 per gallon since the war began back at the end of February. This is all from AAA data, by the way, is where we get this. So 28% jump in about 2 months in gas prices in the United States. The U.S. is a net exporter of petroleum. That basically means we as a country we produce more oil than we actually consume. But as we all know, oil prices are set on the global markets. Yeah, so our prices move in response to the swings in the worldwide supply and demand, and we're kind of subjected to that. U.S. oil futures, well, yesterday hovered around $99 a barrel. That was yesterday. We're going to talk about today in a minute. That amounts to more than a 50% price leap from pre war levels as of yesterday. Why do I keep saying as of yesterday? Today, Brent crude, $114 a barrel. Another big jump here today in oil prices as well. $114 a barrel. Brent crude actually, yeah, it's 114 right now. It did go up to 115 earlier. West Texas Intermediate future, well, their number climbed above 103 here this morning as well. So, you have a couple things happening here. Obviously, Strait of Hormuz, the war, the ceasefires holding, but the resolution and complete solidifying of this war is not out there yet, causing these gas prices to go up. The other thing that's leading these gas prices up, well, the UAE leaving OPEC. We talked about this yesterday in terms of the headline. Here's the more information for you. United Arab Emirates, yeah, they quitting OPEC here as well. That's affecting the gas markets as well. Now, they're doing it for a specific reason to maybe help out the markets, but the exit of the UAE from OPEC is a big deal. It's one of the group's biggest producers, and it also weakens OPEC's control over global oil supplies, and it widens a big chasm here and in conversations between the UAE and Saudi Arabia, who is their neighbor over there in that area as well. And Saudi Arabia is the leader of the OPEC organization. So UAE is saying that we don't want to be part of this anymore. So here's what it could do on the positive side once everything reopens back up. Well, it could free up the UAE to increase output once exports via the Gulf resume. Why? Well, it's no longer be governed by those OPEC quotas, right? The OPEC votes, comes up with a quota amount. You cannot produce more than that amount. UAE is now going to be free to do as they please for oil prices out there. Now, the UAE energy minister came out and he told Reuters in a telephone interview that the decision was taken after examining the country's energy strategies. He also said the UAE had not discussed the issue with any other country before leaving them as well. They'll officially leave the OPEC there on May 1st, by the way, as well. So there's some trepidation with that, right? With OPEC controlling the oil market, the biggest producer leaving that, and that's going to send some ripples when the market reopens back up. Going to send some ripples around that the supply of oil as well from from that whole region, and it significantly weakens OPEC as well for their controlling of the prices here of oil. So all those things are happening, affecting the market as well. The other thing that the traders are paying attention to, even though we pretty much know what's going to happen today, the Federal Reserve is expected to hold interest rates steady here today. Like I said, we'll get that official notice about 11 a.m. our time here on the West Coast. Officials are debating whether to, flag the risks of rising inflation in their policy statement. In the policy statements, the thing issued after the vote happens. The wording is going to be very much paid attention to here as well. But also, this is Jerome Powell's probably his final meeting as head of the U.S. Central Bank. His term is up, and there's confirmation hearings for the new gentleman to take over. It looks like he's more than assured to be, approved to be the new head of the federal chair after some other political things happened over the last few days as well. Now, the reason is the Fed's meetings are a 2-day meeting here as well, but they're increasingly concerned the last month or so that elevated energy costs could evolve into basically a high inflationary period here in the United States. They've been signaling that for the last month or month and a half or so, and they're paying attention to that side before they'll make any monetary policy decisions. With interest rates need to stay, on hold longer than expected. Well, that's the issue here that we're facing also is if they just stay where they are and the market keeps changing, that can negatively affect the markers. The traders, by the way, if you look ahead here, they see little chance the Fed will lower rates, not just today, but before the middle of next year as well. That means traders are betting against the incoming Fed leader, the chairman that's going to be confirmed. His name's Kevin Warsh, by the way. They're betting against his ability to convince his colleagues that rising U.S. productivity will translate into lower inflation and then, of course, allow for looser monetary policy or interest rates lowering at that point. So, looking ahead, nothing's going to happen today. Some even signal that there should be some interest rates increases here coming up. I don't think we're going to get any change here today with the last thing, and they're just kind of on hold watching the economy right now. But the more interesting fact here is just in the future, middle of next year, before we see any monetary loosening up. So it's going to be a tug of war coming on with a new Fed chairman also coming on board. So that's kind of dominating the markets here today. And we'll have to see what the markets do. I predict it's going to be a down day on the market here unless oil prices or something in the Middle East does break free. We'll have to come back tomorrow, of course, 7 a.m., and see how the market is rebounding. And let's get into some other business stories, a couple follow ups here as well. We've reported here several times on McCollum on Business over the years, that the Walt Disney Company, well, Bob Iger, the CEO at the time back in 2015, he floated the idea of spinning ESPN off because it was, cord cutters, et cetera, were hurting the bottom line of Disney and their stock. Well, now the Walt Disney Company is backing away from plans to spin off ESPN. So all those years of speculation, well, it's kind of gone by the wayside now as well. The decision marks one of the first major decisions under their new CEO. He just took over a couple months ago. He stepped in. I believe he took over end of February, beginning of March. Might have been beginning of March there. So very short tenure for him as well. Disney's sports segment, which is anchored by ESPN, generated about $17.7 billion last year in revenue, about 19% of Disney's total company revenue of $94.4 billion. One of the reasons why it's favorable to keep them in the Disney banner now, well, they've kind of figured out the streaming aspect of that ESPN and the sports company. Before, when people cut the cord, they weren't in that streaming business very much. Now they own Hulu, for instance, and you can get it there. They have their standalone ESPN Unlimited app. So they're generating revenue on the sports side now. Whereas back in 2015, people were just jettisoning cable and they were just losing money left and right at that time. So things have changed. New CEOs come in. That story at least looks like the long often rumor there seems to be like it is by the wayside as well. And hey, it's Wednesday here, and every day this week we've had a story like this. So why change it today? Yeah, Gen Xers, step up your game here. If you can. I feel like I'm picking on my generation a lot this week. But here's Gen Xers. We should be in our peak saving years and our ages, of course. And I'm toward the tail end. I'm 77 of Gen Xers. So a lot of them are obviously, and I'm, 49. So a lot of them are getting up there into their 60 ranges here. But a lot of Gen X is looking at it and the prospects of retiring on time, well, it ain't in their future, at least as of right now. There's a newly released employee financial wellness survey. It's coming out from a company called PwC. It found that nearly 50% of Gen X employees are pushing back their retirement dates. Why? Well, stagnant wages, rising everyday costs, and the lack of liquid savings at the same time. Basically, not enough money to retire. Only 38% of Gen Xers believe they can retire when they originally planned to. More than half of this demographic, well, they expect to withdraw funds from their retirement accounts early to cover some of their short-term costs as well. The primary driver of this retirement delay, well, it shouldn't surprise you, the inability to save, all because of the inflation and the cost of fuel, food, etc. That's eating away at monthly expenses, which means you can't put away what you'd like to. 25% of the total workforce is living without a buffer right now. Nearly half cannot meet basic household expenses. Well, that all means Gen Xers cannot afford to leave their current jobs. Well, what happens there? That's also an issue on the corporate side. Corporate ladder stalls because positions don't open up, right? So on the company side, that creates business risks out there. But also, companies face higher costs. Well, because older talent remains on payroll, longer than expected. You can't get the younger, cheaper workers into those spots as soon as you'd like to. So this affects the company's side as well as the personal side. The findings of this report also show that a significant portion of the workforce, about 41%, by the way, they feel they were never given the tools to manage a crisis of this magnitude, leading to a sense of being overwhelmed by financial choices in today's day and age. I mean, we went through a huge one, right, in the early 2000s there with that great financial breakdown of the housing market, et cetera. But now this inflation is completely different than back then as well. So it can be overwhelming. Take deep breaths and got to continue to work through it, of course. And everybody's situation's different. But Gen Xers feeling the heat here as we are getting closer to our retirement age out there. And first of all, when did we get so old, right? Hey, when we come back here at McCollum on Business, we keep it rolling. Walmart made some big announcements about their company as a whole, but we're going to talk a little bit more about Arizona out there. Yum Brands making some big announcements on one of their brands out there. You like chicken? Oh, news for you coming up here. It's going to be an expansion you're going to be flocking for. Lame, I know. You're welcome. And if you like pickles, stay tuned. I've got the story for you. You can taste like pickles all day long. I'll tell you about that. Come on back. McCollum on Business, Wednesday edition. And we're back here, McCollum on Business Wednesday edition. Oh, so excited for it to be in the middle of the week. Of course, we're here 7 a.m. as long as markets are open. We'll be back tomorrow and Friday, of course, at 7 a.m. Then we go right into the main event, where usually it's me and 17-year NFL veteran Dale Hellestrade. Well, he's been off the beginning part of this week. He's off again today. Yesterday, of course, Bruce Cooper joined us on Tuesdays like he does. Tomorrow, Uncle Lou comes in on Thursday as well. Dale will be back tomorrow. As long as he comes back from his vacation, they're all in good spirits and able to come in as well. But look, fun times here as well. Today, though, well, I'm only going to be on air for the main event for about an hour. I got an 18-year-old graduating high school here in about a month, and we got some award stuff with ROTC today. And I've got to get across town for a 10:30 ceremony. So we're going to be here from 8 to around 9 o'clock. Guarantee you the hour today as well. So come and join me over there. Catch us on demand. All of our shows are on Robat TV, Rumble, rumble.com/user/TME Media. You can find all of our programming there, including The Real Matrix, which comes out on Fridays at noon as well. And then, you can also get us on YouTube. TME Media AZ is where you can find us over there on YouTube as well. All the shows, except for this one and The Real Matrix, have podcasts as well. So find those on your favorite podcast system. Just search the show name and it pops up for you. Follow us at TME Media AZ on X as well. You get some show programming notes, things we do around here as a company, and now everything to that effect. The pit stop, by the way, up early this week. We got that done yesterday. Had to do it early, all because of today's, personal stuff I got to go take care of. So that is happening. Pit Stop is up yesterday. They're on demand as well for you now on Robat TV, of course, YouTube, and on Rumble as well. And can't thank you guys enough for your support. Our growth is amazing to see. And we thank you very much. We're doing a lot of testing around the YouTube stuff right now. So you'll see some live stuff here and there. And we're just testing to see what we can put out, what we cannot put out, and things to that effect. So you want to follow that TME Media AZ and see where we are headed from that perspective. With all that being said, well, let's get right back into the Market Watch. And we know this, the markets are down today. Oil prices, Fed decision coming up at 11 o'clock over here in the West Coast time frame. Oil right now, Brent tops $114 per barrel this morning. West Texas Intermediate over $100 a barrel this morning. Oil is back up here as well, and that's making the markets drag a little bit today. 199 points down right now for the Dow Jones. The S&P 500 is down to 6 points. The NASDAQ is down 23 points right now for the tech-heavy index. Then you got the small cap index, the Russell 2K, down 7 points as well here this morning. Bitcoin, well, just hovering in that $76,000 range the last couple of days. 76,596 for Bitcoin here today as well. So stocks we're paying attention to earlier, we looked at memory stocks. Well, we're going to look at some other things, some financial stuff here. And the first one's Robinhood is that we're going to look at. They're tied around the cryptocurrencies, of course, but they do other things. But they're down 12.23% here today. They first quarter results basically missed the expectation levels that they had for it. Robinhood posted earnings of 38 cents per share. Everybody was looking for 43 cents per share on average. Their revenue was $1.07 billion. Everyone was expecting $1.18 billion for Robinhood. Missed numbers hugely, and they're paying the price today in terms of the stock market. 12.10% down here today. Next up, we got Humana as the stock we're going to look at. Insurer company, well, they fell today as well, 2.59% down right now. They reported an earnings and revenue beat in their first quarter result, but they're still down today, 2.59%. They delivered earnings of $10.31 per share. Expectations were only $10.20 per share. They had revenue of $39.65 billion. Expectations was only $39.37 billion. They beat their numbers, so why are they down 2.53%? Well, dug into some analysis reports on this, and their guidance for 2026 was reaffirmed at the above estimates. Well, the full-year revenue outlook, though, came in cooler than expected. That's why they're getting a little bit hammered today on the market. Their future modeling is not good in terms of their numbers. 2.30% there as well. And then let's talk a little food here. Mondelez International. Sour Patch Kids, Oreo cookies is this company. 5.01% up. Folks, you are loving your Oreos and your Sour Patch Kids. They have a bunch of other stuff, but those are the two most popular ones out there. They're at 5.02% right now as well. First quarter adjusted earnings of 67 cents per share. Oof, get mouse drilling a little bit thinking about some Oreos out there. Well, the expectation was only 61 cents, so beat their expectation by 6 cents there. They had revenue of $10.08 billion. The expectation was only $9.75 billion. So Mondelez, you're eating their candies and their food. They're up big today, 4.90% based off of that information that they gave us yesterday as well. And now, one local story here for you, and then we'll get into some interesting things. You like pickles? You want to stay tuned here coming up, by the way. But Walmart yesterday did a huge announcement around their companies. Saw it on several business sites as their general announcements. Then you're able to delve down a little bit. And they talked a lot about Arizona here coming up as well. So Walmart yesterday announced continued investment across Arizona with their stores. They have plans here in 2026 to remodel 18 stores in the Arizona, all part of ongoing efforts to modernize the in-store and, more importantly, the digital shopping experience with Walmart. They want to upgrade layouts, technology, even services to offer faster, more convenient shopping, and then do what everybody kind of expects now, delivery in as little as an hour for most customers moving forward. So across Arizona, Walmart's new and remodeled stores, they bring that vision to life that they want to get done. Expanding services around free pharmacy delivery for Walmart Plus members. That includes, by the way, those GLP-1s that are all the rage right now. They have a store. They're going to do a store-based app experience that helps customers easily navigate through stores, book services at the auto care center that Walmart's have as well. So that's just what they're looking to do here with these stores here in Arizona coming up here this year. If you want to go on the national level on their big announcements, they're planning remodels at more than 650 super centers across the United States, and even those neighborhood markets are included in that. Walmart invested more than $514.7 million dollars to upgrade their stores throughout Arizona alone over the past 5 years. Another 18 stores coming this year. If you want to look at just over the last year, I do not like shopping at Walmart. I don't like Walmart as a company, me personally, but Walmart does do a lot of good for the community. We got to give them credit for that. Over the past year, Walmart and the Walmart Foundation, they donated $42 million dollars to local nonprofits. They provided 20.7 million pounds of food to help fight hunger as well. They also just kicked off its annual Fight Hunger, that whole campaign there to help address food insecurity locally here in Arizona. Every donation and qualified purchase does provide access to essential food and resources to local food banks in the Phoenix area or Arizona area. So obviously helping families to thrive and get the food that they need as well moving forward. So I am pretty negative on Walmart. Just the experience, it's not easy to shop there. Like Target, I can do things on the app, or if I'm in a Target, I can just look in the app. It'll tell me where to go to find it. It ain't that simple at Walmart. You just got to wander. You got to do your self checkout lanes. It's the whole Walmart thing for me. But I'll give them their dues on their charity sides. Absolutely. Here as well as they're looking to expand. And another big expansion coming our way here. And if you like chicken, yeah, KFC is coming. I was fighting that off for a while there, folks. I apologize for me sneezing. KFC, look at that. The herbs and spices got my nose a tingling. Yeah, supercharged growth coming here for KFC. The new Yum brand CEO told Yahoo Finance this week he is focused on meaningfully accelerating the growth of KFC. I think I'm going to make it, folks. I apologize. KFC is the largest brand in the Yum brand's portfolio, sporting more than 34,000 locations around the world. A new KFC actually opens somewhere internationally every 3 hours, according to the company. Not only that, they still want to expand on top of that numbers there and keep the expansion going. Hey, KFC actually reported that system-wide sales increased 6%. Operating profit for them improved by 9% in their first quarter. Last year, KFC had the best operating profit increase in the Yum Brands portfolio. And if you don't know, Yum Brands is, what is it, Taco Bell, Pizza Hut. I know Pizza Hut's been struggling. We've had stories on that. And then, of course, KFC. And there's a few others I'm not thinking of right now. So might see some new expansions here of KFCs coming our way for you chicken lovers out there. And then, folks, we have to get into this one. You like pickles? I do. How about you want your Burt's Bees with a pickle lip balm flavor? I don't want that. Maybe you do, though, right? As we go forward, customers picking up that Burt's Bees lip balm got to pay attention to the flavors even more closely because new flavor is out there, folks. Grillo's Pickle Spears, as you see there, the Burt's Bees on your screen. So, this personal care brand of Burt's Bees is teamed up with Massachusetts-based pickle company Grillo's. They're launching a limited edition fresh cucumber dill lip balm flavor. Mm-hmm. By the way, Burt's Bees is owned by Clorox Company. So, Clorox Company, I saw this press release and I was like, why is Clorox talking about lip balm? They earn Burt's Bees. But the Clorox company, came out with these statements here. They said in with a statement with Grillo's as well, an April 27th news release, they said their brands are tapping into society's love for pickles. They said, quote, flavor trends don't stay in the kitchen anymore. Today's consumers are embracing bold, nostalgic, and even playful sensory experiences across categories, from food and beverage to beauty and healthcare. Yeah. They said that today's influx of pickle flavored snacks, drinks, cocktails, it shows how much Americans love the tangy sour profiles that feel both indulgent and refreshing. This is available in stores right now, by the way. It's sold exclusively at Walmart here for a limited time. So it is available in store only, so you can't even order it online and have it shipped to you as well. So pickle flavors are in everything. Apparently, Gen Z and the millennials love pickle flavors. That's why you're seeing everything come out in it as well. You know all the food ones they got. You know there's lip glosses from I think Elf, the beauty company. They have pickle lip glosses and things to that effect. I've seen some dill pickle meat sticks and uh, pickle scent is everything out there. We had that pickle flavored ranch we told you about here at McCollum of Business a while ago as well out there. I even saw reading this story, USA Today on a story on this had Pabst Blue Ribbon Grillo's pickle beer as well. That's out there. So pickles are all the rage. Lip balm can be for you. You want to walk around smelling pickles all day on your lips. Check it out. Appreciate you sticking by me with my sneezing fit I'm going through here this morning. Hey, we got the main event coming up next. A little bit shorter show, so come and join me from 8 to 9 as well. Follow us on TME Media AZ on X, also on YouTube as well. Rumble.com/user/TME Media, where you can find us over there as well, folks. Hey, we'll be back tomorrow morning, 7 a.m. McCollum on Business. Come and join us.